On this episode, I get the pleasure of speaking with Chris Crocker. Chris has done it all, from his humble beginnings of being the office runner at a commercial real estate company to being chief operating officer at Pacific Sotheby's International Realty. Now being the VP of Homelight, a third-party real estate marketplace for borrowers with Silicon Valley tech influences, it's safe to say that Chris has his finger on the pulse of the real estate industry. Chris and I discuss if real estate agents will go extinct, what mortgage companies are doing to speed up the closing process, current economic real estate outlook trends, iBuyers and the certain sale, and of course, how to get jumbo referrals from top luxury realtors. And before we get started, please like, share, subscribe, and comment. Let us know what you want to hear.
Welcome to the $1 Million Mortgage Experience Podcast. Listen in as CEO Jon Maddux of Fund Loans reveals tips, secrets, and origination ideas to fill your pipeline with $1 million opportunities.
Welcome to the show. I'm Jon Maddux. I'm here with Chris Crocker. Thanks for coming on.
Thanks for having me, John.
Absolutely. So you're a technology guy. You're a real estate guy. You've been in the business over 20 years. You've seen a lot. You've seen a lot of the luxury side of real estate. You've seen a lot of the tech side, like I mentioned. Tell us a little bit more about your background and kind of who you are and how you got your name.
Yeah, so I started at the bottom. I mean, okay. I actually started as a runner in a commercial real estate firm. Okay. And this is before we had databases and before there was a CoStar and all that stuff. And we used to drive around with a notepad and take notes with a voice recorder. And then we'd have to go look up what's on the northwest corner of this intersection and find it in the microfiche. And
you didn't have an Apple
microfiche.
iPhone.
Yeah. This is way back in the old days.
You used the Thompson maps, like the Thompson
brothers?
You
used to use the Thompson guide. And then I'd have to go down to the photomat and get double prints made of the actual old photos I made of the buildings. And we actually built a database of the San Fernando Valley of Los Angeles, the wall. Wow. All photos and crazy notes. And yeah, there was before we had MLS systems.
Man, so you've been in it a long time. That's cool. So what kind of made your, how did you go from that to what you're doing now? You're on the management team, right, of Homelite?
I am. Yeah. So I've actually played around the whole space. Probably one of the few people that's had almost all job titles you could possibly do in the industry. So okay. I was an agent. I ended up being a branch manager of a real estate sales branch. Okay. I ran training programs for Coldwell Banker for a while. I ran marketing for a couple different cities, and I spent some time inside of Zillow. So when Zillow was a really small company and it wasn't really well known yet, right? As part of the management team,
it's hard to think that was a thing, right?
It was 2005, so and
wow, yeah.
Originally it was this gossip site where you could look up your neighbor or your dentist's house value, right? It was until many years later that listings.
My house is better than yours, and then you zoom totally. In from the satellite view, and that's cool.
Yeah, so it's essentially tapping into this voyeuristic nature we have of wanting to know the gossip in your neighborhood, right?
Interesting. Yeah,
it's become a lot more than that, but
right.
That's how it started. So I was part of the Zillow team when we took it from a small outfit to a big one. Okay. So there was a lot of uncertainty and what's the future going to hold, and where does Zillow play? Are they friend or foe? That was actually part of my daily life. I actually lived that every single day. Right. So we made partnership deals with brokers and agents, and
so you were there just at the ground floor, pushing Zillow's growth. You were part of that growth.
If we rewind the clock, you might recall if you looked at Zillow in any given city, it was missing half or 3/4 of the listings in many cases. The listings were added over time. And
I remember people just Zillow sucks, or Zillow doesn't know, what they're talking about. The value sucks. It's not even close, to what my value is. And I remember people would always say that, oh, don't trust Zillow because they're guessing what the value is. But I think it's gotten a lot better
substantially,
right? Because it's really using a lot more, it's using the technology side a lot more to really drill down on what matters in appraisal and value, and right. I mean, is it market timing? We can get more deeper into that, but I want you to finish kind of telling us how you got to Homelight. Because that's really on the front of technology. Homelight, it's very tech forward. It's really a tech company, but their focus is real estate, right? Is that? Yeah. Tell us a little bit about Homelight real quick.
Yeah. So the primary business plan is find consumers that are looking to make a selection, right? So how do you pick a real estate agent is a very subjective thing. Okay. So you and I might go and ask a couple of our friends. We're of course in the business, but the average person doesn't have friends like you and I, and that know the agents and who's good in our neighborhoods,
or they don't want to use them, like Aunt Jackie.
Yeah, totally.
I don't want to use Aunt Jackie shit.
Yes. Yeah. My mother's got this friend, and I don't want my mother's recommendation. That's for real.
Yeah.
And then what we keep forgetting all the time, because we're so close to it, is that, about a third of the houses are not owner occupied in America. Right.
So they're just sitting there. Some of them are vacant, right? A lot of them.
Or the rentals, or someone passes away in the family and one kid's in Detroit and one kid's in Florida. Like, they don't know who's, good in that particular neighborhood. So Homelight built this algorithm that essentially mines all of the data and the transaction history and says, like, who do we think is good based upon their past history? So
and they kind of pair you. It's like a match.com almost. Like,
match.com for like who's good for your product class in your area.
Okay.
Based upon, the previous histories.
Okay.
So the person you might think is the best agent, has lots of signs in the neighborhood, but does that mean they're really good?
Right. Speaking of that, like you're starting to see a lot of signs for Compass, right? Like you used to have a friend that worked at, at Keller Williams when it worked at, Berkshire, but now it's like all your agents are all at Compass. What's going on with that? It's like they're just gobbling up all the different teams,
so there's always been movement in the real estate game. Right. So as an operator running a brokerage, which I've done a couple of times in a couple of different brands, like there's always a newer, fancier, shinier, like cooler
shiny
thing,
object.
right?
Yeah, exactly.
And if you recall, when Keller Williams came on the scene, like their real advantage was energy originally. Mm-hmm. They had a focused plan. They had really good training. They had really good energy. And like all we talked about was, all the agents are leaving going to Keller Williams.
Right.
So there's a newer thing, a new shiny penny. Mm-hmm. The difference is that this particular one has a very large sum of money and is actually building substantial tools.
Are they a tech company too, or are they just mainly real estate?
I guess that's a real good question. I'm not sure that they would, if you actually put Robert Refkin in the room with us right now, what he would say his company is, but I believe they're a tech company that just happens to be playing in the real estate space.
Interesting.
They might say differently, but...
So a lot of people are going over there. It's kind of the new shiny toy. Do you think that will sort of mellow out? Because it's been really hot, like for the last year, I would say. I've heard, I don't know, almost every agent I know just has gone over there, right? So do you think it's gonna wear off, like that shiny toy thing with them, or is that still got momentum? I
think it still has momentum. So we can make an analogy on the commercial side, which was like, if you rewind the clock 10 years, there was lots and lots of commercial firms, and then one day there was like CB Richard Ellis.
Right.
And they're like the preeminent commercial real estate firm, and all the corporate clients use them.
Interesting.
And they have this footprint where every single place you go, whether you're in New York or London or Hong Kong, you're gonna get a similar experience, similar caliber of personnel.
Gotcha.
Similar tools. I could draw that analogy. I could see Compass having like the top 10 percentile agents in the top 50 MSAs in America. And therefore, if you're a high net worth client and you're moving from Miami to Seattle, you know exactly what you're going to get. Like there's a real big opportunity there.
So do you think there's a deeper behind the curtains kind of end game that they're trying to play that, is like one day we'll wake up and it's like all of a sudden something's going to be changed, like some secret's going to pop out like with Compass, or is it like just what it is?
Well, there are a couple things in there. One is that they have a lot of people, right? Their staff count is very high.
Right.
They've recruited a lot of really talented people that are not from real estate, who are looking at from the outside in and going, "Hey, this doesn't make a lot of sense to me. Like, why do you do it this way? We can do it a better way."
Right.
And so
like their signs look awesome, right? They're cool signs.
Cool.
Yeah. But keep going.
So I actually do believe you take a bunch of smart people like that who look as outsiders in the business. And then say, how can we make the tools better for the people, that you'll actually get something on our side that will be meaningful?
Okay.
Like I think that will be for real.
Okay. Do you think they're going to, I know everything's trying to go automation, right? Everything's trying to be less touches, less friction, less, just quicker, faster, easier process. Do you think that Compass will eventually kind of like just start knocking off agents and just start automating things? Do you think that's in their end game, or do you think that's way, way far down the road?
I actually hear this all the time. So, whenever anybody comes in from outside of real estate into real estate, typically technologists or venture capital firms or like investors, they go, hey, we're going to build the end all be all beginning to end system, and like the perfect stack is what the technologists would call it. Like I've heard that for decades.
Right.
Like KW was going to build it, Realty was going to build it, Zillow was going to build it. Everybody wants to build the end all be all stack. Like there's no reality in that. Like, this is still a very human business.
Yeah, that's true.
That happens in people's living rooms at what I call the kitchen table. Like, are these real? Like, is automation happening at the kitchen table? Probably not.
No.
Right.
People want to look someone in the eye and be like, why is my house not closed? Or do you think I should do this as a big decision? Do you think that, they want someone to kind of coach them a little bit, right? You kind of have you kind of have to have that, especially in a big it's your biggest investment, right? It's like a house is your biggest investment you'll ever make. That's what they say.
So we've had all this new information, right? So we've now got all these tools, all these cool sites we can go to. Everything's transparent. Like
Redfin,
has that
Zillow.
given us clarity, or has that actually opened up more questions? Like, so it's my opinion, it's actually opened up more questions, and there's more of a need for a real pro, to really like digest all the data.
So how does Homelight solve any of these problems? What does Homelight do?
So the beauty of Homelight is it's just a neutral third party.
Okay.
Right?
So it's really the match.
You cannot buy ad space. Right?
Okay.
You can't game the system. You can't buy a preferred status. You can't buy like, I want to be in the upper right hand corner. Like,
you just actually truly have to be that agent that's there.
Right.
And it takes time. And
all the agents call and say, hey, how do I get on? And like, how can I get more deals from Homelight? Well, you can get more deals from Homelight by being a good agent. Right. The system just recommends like, what a novel concept.
What a novel idea.
Do a really good job for consumers. Like actually the real ones are really, really obvious. It's like, don't overprice listings and take them like, because this isn't a fair comment, but in many cities, you all know there's that agent who basically takes whatever the consumer says and puts that price tag on it and says, I'll wear them down. Like that's not a good consumer experience, right?
Right.
Like you should actually push back, have a real dialogue and like put a realistic price tag on a house. Because if you overprice a house and it sits out there for 6-9 months, like that person had a really bad experience.
Right.
Like, no one wants to sit there languishing with their house in the market for 9 months. At least no one that I know.
No, not at all.
And definitely not like the other person you live with, because then they have to all go through the like, hey, I want the house ready, and somebody's gonna come over in an hour, and it's all a mess. Like we hate that. Like we don't want people going through our living rooms and our bedrooms. So
less people, the better.
So like if we can make showings go away altogether, like people would love that. But
I mean with so they have those 3D cameras now. They come in and they take pictures. So it's like you kind of almost feel like you don't feel like if you put a VR headset on, maybe you'd feel more like you're walking through the house. But I mean the technology is getting there. I mean remember the days when even Zillow had just the crappiest photos like on. You have 6 pictures of your house, and it's like just terrible angles and picture of the toilet or it's just terrible stuff. But now there's really great photography done on a lot of homes. Does Redfin sponsor that because Redfin is a good place besides Zillow? I mean they both, but I think Redfin would be more of the one that's driving some of these nicer pictures, or is it something else that's driving?
It's actually the individual listing agent, and actually one of the root causes, it's not a fun topic to talk about, it's like the mess that is the MLS system, right? And the actual database where all the data comes from. Like, it wasn't too long ago, the MLS, like to save money on storage, would like water down the photos and make them bad quality, which is total insanity, but that's what they did.
Yeah, that's crazy.
So, we would take these beautiful high-res photos, put them in a database, it'd water them down to junk, and then we put them on our website.
Interesting.
So that's gotten a lot better. We've upgraded. The photography's gotten better. The internet speeds have gotten faster. So there's really no excuse for bad photography now, but it's surprising how often it happens.
So as a tech person, our viewers are mortgage brokers. So as a tech person that's thinking of technology in real estate, what do you see coming? Is there anything we should be worried about as mortgage brokers? Real estate agents are out there. A lot of our viewers, that's our main referral source, right? The referrals are coming in from these agents. We're doing the same thing. We're referring back to an agent. Is there anything that we should worry about or watch out for with this?
I wouldn't say worry about, but I definitely think we've heard for years, as a matter of fact, there's a famous NAR thing about this lion coming over the hill to eat the industry. And once upon a time it was going to be Microsoft, and then it was going to be Google. And so
Amazon.
Yeah.
Zillow.
So Amazon's coming. So that's always existed in the background. Only this time for me, it actually feels really different. There actually is substantive change happening in real time right now.
Talk to us about that.
So in the old days, you'd say let's say there was only 100 transactions in America, 10 of them would go to some FSBO,
right?
Who, there's always some person who thinks they have a better way, they want to do it themselves,
right?
That would leave, and then maybe 5 would be in some kind of weird new thing, but 85 people would fall into what we call full service mainstream America,
right?
So now we've got more expanded discount offerings. So you've got Homey, Purple Bricks, HomeBay, Realty, all these fixed fee operators operating a similar service for more cost conscious people. And so
I know about Redfin, they're 1%, right?
Right.
And then so there's others that have instead of 1%, is it just like a flat fee, right? It's like $2,000, $3,000,
it's like
whatever.
$2,000, like maybe $3,200 on average if you like averaged them all out.
And are they any good? I mean, are they?
Yeah,
they're good.
They are.
Okay,
they actually do a good job.
Okay,
not for everyone, right? We don't all want the same things, but
sure.
I think it's one mistake we make is like everybody wants the same product. Where
is it good for the listing agent side or more for the buyer side or both?
There are people that just want to find the cheapest path,
right?
Like in America,
right?
They go to Costco, they go out of their way,
right?
Like this is the person
to wait in line in the gas station line for like half hour,
totally,
to get to save $3,
nickel
right?
saving on my per gallon, right?
Yeah.
But I drove like 50 miles to get there and consume more gas in the savings, right? Yeah, that's always
the mentality, right? Yeah, it's like I saved money, I did it.
I did it. I took control. The man didn't take it from me, right?
Right. So this model works well for both sides, or for just for listing agents?
Yeah, but it's not just people that are cost conscious. Like there are a lot of boomers who've sold 5, 6, 7 houses that have been through it and said, hey, last time through, I don't feel like I got good value for this. Like I know what happens. I know my house needs to be in the MLS, and I know it needs to be on Zillow, and it needs to be on Redfin.
Well, they see the closing statement and they're like, geez, that agent made $50,000,
Yeah. Especially when the house that sells in like a week, right?
Yeah.
Yeah.
Dang, they get pissed.
Right. I underpriced my house. Yeah.
So there's a lot of ads now. I think I see them on Instagram, Facebook. I see them on. I don't really watch like commercial on TV anymore. Who does, right? But if you do see some ads, like I think I saw one with Tony Hawk, and he was talking about like agents. Agents are going away. Like, do you think that's true? Like, are agents going to go away? Like, no. Right.
I think what'll happen is we've got 2 or so million licensed agents, and
Tony Hawk, you're wrong.
Yeah. There's about 1.2 million plus or minus NAR members. Like we don't need that many.
Right.
But like it's my personal opinion that every neighborhood has somebody who's really good at their job.
Yeah.
Who knows the inventory well, provides serious value, has tools and systems. Like I expect those people to grow and get bigger. What I expect to go away would be the onesie twosie. I sell 1 to 4 houses a year, and
soccer mom maybe.
Yeah, I just bump into like a couple of family members, or like there's no real value add if you do a handful of transactions a year. You don't really have any knowledge.
Sure.
Like do 50 sales a year, like you actually know the process well.
Right.
2 sales a year, like you're relearning.
Yeah, I guess
as you go.
Sometimes like that soccer mom I say, but it could be anybody, right? It could be just a guy with a side job, soccer dad. Yeah, just anyone that your Uncle Rick that has his license, but he's an engineer or something. Use my license, I'll give you a kickback or whatever they might say. They might I'll do it for 1%. Well, now there's Redfin and there's other places for flat fees, so you don't really need Uncle Rick to give you a 1% or a deal.
And
right?
frankly, you're better off without Uncle
You're
Rick.
better off not going to Uncle Rick. But
so I remember this as a branch manager, right? Okay. So when I ran a Cole Banker branch. It was in the Cole Banker branch. Okay. It was an NRT branch, and I had 120ish or so agents I was responsible for.
Right.
And they would come in and say, "Hey, I got a new listing. Could you give me that checklist again of like what I'm supposed to do?" Like, and I would just go, "Oh my God, you have no idea what you're doing." Like, okay, here, I'll take care of this for you.
Right.
And then we would essentially reteach that agent how to sell a house like every single time. Like the public doesn't see that, but as a branch manager, real estate branch, like if anybody watching this is, part of brokerage, you know exactly what I'm talking about. Like, like that happens a lot. And so that's not really a good consumer experience, especially for the dollars, especially when the pro is charging the same as the rookie.
So what kind of technology has come into this space, right? You have obviously the all the data is the technology, but what other technology, like tell us a little bit about some of the new technology things that are coming into the space, like as far as, maybe showings or, even the signs are now like talking to you. And I mean, what else was kind of new that we might not have heard of?
Most obvious one is that like, what's the value the agent provides, right?
Right.
So on the buy side, it's simply right now, I just need to get into the house. Like I can find houses by myself. We've actually perfected the art.
And people like to look at houses that they're not even buying. Like
my wife is all over that thing all the time. Like she knows every Redfin listing in my neighborhood.
It real estate porn, right?
Yeah,
they're just
totally.
They're addicted to this, like looking up
Hold
sites.
on a second, honey. There's a new listing. Like more important than our conversation, right?
Yeah. Right. Yeah. Keep going. So
so my wife knows the inventory better than the agents in our neighborhood. Like, and I'm not in the market.
Right.
Like, that's not right.
Yeah.
So if finding a house is not a value, right?
Sure.
So I can find a house using any tool I want, and there's all manner of varying websites. Some really good, some suck, right? Getting in the door, actually in Colorado now, there's an Uber-like service sponsored by the MLS where you just pull out your phone, push the button, and the nearest agent will go unlock the door for you.
Oh, that's cool.
Is that
it's just in one city, or is that
it's sponsored by the Denver MLS.
Okay.
And
so that should be coming to all cities, I'm sure.
Yeah,
at some
so
point, right?
the Uberization of like real estate showings is going to happen, in my opinion.
Okay. So you won't even need, maybe at some point it'll even be like a home, like Echo in your house, or like Google, open the house and like talk to you while you're
Alexa,
going in.
get me into that new listing on Redfin.
Right. Yeah. Is there what else? Anything else that's out there?
Well, then it comes down to like, what's the value add? The value add is actually the knowledge of the marketplace, right?
Right.
So I have all this data
here, but this thing. Yeah.
I'm overwhelmed.
Okay.
Right. There's so much transparency on the data now. You're underwhelmed. You actually can't process it. Like
too much information.
Right.
Yeah.
So can a pro help you distill this decision down to like what really matters and help you make good choices?
Right.
Like there's the value add of an agent.
Got it.
Right. Not in the access. And a lot of the real estate agents still think like, I have to control this. Like, we control the listings or somehow put them back in the, put the horse back in the barn. Like it'll all be better.
And they're going to yell at the escrow or the loan broker to say, what's wrong? Why are the docs at escrow and all that stuff? Yeah.
The horse is not going in the barn. Like it's out. It's done. Right. We're good there.
But then you're like, well, is this worth this money that I'm paying, right? So what's the average, would you say, commission nowadays? It used to be 6%. Now it's, I think, 5 or 4.5? I
think statistically it's somewhere in the 5.2 range. Like as you look across America, and there's some pretty big regional variances, like lower in the really competitive areas like Los Angeles or New York City. But what's interesting when we look at commissions is we think it's 5 or 6 here in America.
Right.
But if you go overseas, it's 1 to 1.5% in many markets.
Pretty low, yeah.
Most of Europe is super competitive. So a lot of the tech players are looking at what's happening in like Australia and the UK and Germany as like guidance for where does this go over maturity.
Interesting. Because 6% that's a big part of the
and the buy
price
side
of the house.
commission is like 2.5% for like the buyer's rep. Like really?
Yeah.
If you're bringing that value add and you're actually giving that guidance, then it probably is 100% worth it.
Right.
If you're just unlocking the door, then you're not getting 2.5% worth of value.
Definitely.
Right. And as a seller, like the seller puts the house on the market and doesn't want to challenge it. Right. They don't want to be the guinea pig. They want the guy behind them to be the guinea pig. Right.
Yeah.
So
that makes sense.
So the 2.5% of the buy side still like out there, but it hasn't been changed much. But I expect that over time that'll get changed. There'll be competition around that.
So I've heard, I think we've talked about this on the podcast before, where there used to be travel agents. Do you think that this disruption will be kind of like that, where we say, oh, remember there was travel agents, or my mom used to be a travel agent. Now it's, there's just Travelocity, and you don't really need a travel agent. There are some reasons why you would have a travel agent, but it's pretty rare nowadays. Do you think it'll ever get to that point in real estate?
No.
You think there always will be a need for
the cost of making a bad airline purchase is not that great, right?
Right.
Like
you're talking apples and oranges.
If I had to throw the ticket entirely away and start over, like I can't hurt my family that much. The cost of making a bad decision around here is not the same as an airline ticket, even a first class ticket around the planet.
All right, well, let's talk about how this will change for the better then, because that's good, because we do want agents, because they are a big part of our referral sources. I'm sure it'll weed out some of the bad agents, like you said, but what will it do for the speed? Like, what will the technology do for the speed of the transaction? So
the escrow we have today, is a 30 to 45 day, depending on
crazy.
It's going the wrong way. It's going up, right? So if you ask me to fast forward a couple of years, it's my opinion that the contingencies we know will just disappear. That's kind of a bold statement. Yeah, why should we have them? Let's get rid of them all.
Well, especially if right now your sellers want no contingencies. Those are the deals that go through faster or get accepted, right?
We're a little too close to this because we've been in this forever. But if you really think about this, why would I sell my house to somebody who actually doesn't know if they're going to get a loan?
Yeah.
I don't want to do that.
Right.
I want to sell my house to somebody who already has a loan. Yeah. Right. That's just madness. But of course, that's the process we all live in.
Well, I think that's why a lot of cash buyers win. Right. And so, if you're a new first-time home buyer, you don't have all cash, you're not super rich, you're going to be at a disadvantage competitively. from anyone that has cash. So there's got to be a way to put them back on equal playing fields, right?
So I expect this will be the biggest area of opportunity in the mortgage industry is like who creates the cash-like products, right? Because cash does win.
Right.
Cash is certainty. And as a seller, when I'm selling my house, I want certainty.
Right.
I don't really care what your mortgage rate. I just want certainty.
I just want to know this is going to close.
Right. So that requires better process. That requires, everything that goes into making a loan, like the whole process and the underwriting, like in the weeds, that happens here at Fund Loans, right?
Yeah.
All that magic in there, like that actually has all this opportunity to be improved and actually taken care of long before the offer is made.
Right.
So I'm seeing this whole new crop of people that are making cash-like mortgage products where seller of house says, hey, I've got 4 people to sell to, 20% down contingency, 10% down contingency, 99% down, almost all cash.
Right.
And like cash backed by a major corporation, I'll take this certainty. Thank you very much.
Right.
The only reason we would take cash is because there's normally like some kind of discount associated with cash.
Yeah.
Right. But if cash is the same offer price on your house as the things that have contingencies, I wouldn't do that.
Right. Interesting. So is that what you call iBuyer?
So the iBuyer space is home sellers going to sell, right?
Okay.
This concept has always existed, right? There's always been somebody in your neighborhood who's willing to buy a house for 70 or 80% of its value really fast with their cash.
Yeah, like those yellow signs on the freeway that say buy cash now. Or,
you see them on the off ramps.
I'll buy your house. Yeah. I'll buy your house cash. Yeah.
That's actually a pretty big business now. That actually is all systematized, but
it's not just someone scribbling on a sign saying I'll buy your house. Yeah.
It's like a system you can subscribe to. But yeah,
that's funny.
That's always existed, but they were largely predatory, right?
Okay.
Which is there's always investors
because they're looking for people in trouble, and then I'll get they'll get a deal on your house.
Yeah,
basically.
So if I can buy a house for 80% of value in our neighborhood, I would do that all day long. Right. I'd buy every one I get my hands on, and I'd renovate it, put it back on the market, and I'd make the spread.
Right.
But what we're seeing now is actually systematic, smart corporations with really good tools, offering 94% of the value of your house. Like, take it, move out on Monday.
Right. Like, so, because you're going to pay that anyway with commissions and then take the brain damage of it not going through, falling out, all the crap that goes along with that. Right. So someone comes along, I'll buy it 6% off.
So you got Knock, you've got Open Door, you've got Redfin with Redfin Now, you've got Invitation
Zillow
Homes.
jumping into that?
Zillow is 100% in the game. They're doubling down, as a matter of fact, in the space.
Okay. So they're a frenemy kind of, or not?
They're making 92, 93, 94% of fair market value offers on houses with we'll close on Monday. And by the way, just take your time and move out when you're ready. And we'll help you with the loan on the next one. So this is very real in Atlanta and in Phoenix right now.
Okay.
So in Phoenix, it's my understanding that about 20 to 22% of the inventory that would normally come to the market is not coming to the market because it's being purchased by one of the iBuyers.
Oh, wow.
So one in 5 houses is just magically disappearing because an investor bought it before it ever came to the market.
Wow. So transactions are diminishing.
Right. Unit counts down. And the agents in Phoenix are now walking into listing presentations. And instead of starting with a conversation with, hey, my name's Chris, here's what I can do for you, the seller is standing there going, I have an offer for $264,000 from an Open Door in my hand. What are you going to do to better this? It's a very different dialogue.
That's very interesting. So unpack that more. How does that affect? I guess it's going to affect agents. It's going to affect neighborhoods. So let's take the math here, right? So if it costs me 5% to sell my house, then arguably I'm going to get 95% of the fair market value. If the iBuyers went from 92 or 93, 4% up to 95, then it would be irrational for me to actually list my house. Right.
I could not have any showings, not have any open houses, not having to go through my drawers and
that doesn't really show, because it won't show up on the MLS as a closed deal, right?
No, it'll show up in the tax records. It will never been listed in the MLS.
So as far as comps go, your neighbor's not going to go, well, you sold your house cheap. I'm pissed because it's not showing. You know what I mean? With comps, when you get appraisals and you have, okay, this house sold. Is it going to create a downward pressure on prices at all, or do you think it or not?
Well, it's going to be fun for appraisers to sort out because appraisers tend to use the MLS as a source of truth, right?
Yeah.
So if you're an appraiser and you're in Phoenix and 20% of the market isn't in the MLS,
right?
Should you be using that data? I mean, arguably yes.
Right.
But we would normally say, hey, those are opportunistic sellers who were desperate. But what we're seeing in the real numbers is these are not desperate parties. Yes, there are people that, inherited a house and they don't know who's in Phoenix.
Sure.
And they use an iBuyer to provide liquidity and ease and convenience. But there are baby boomers boomers in that bunch. There are Gen X, Gen Y, like all of the above. Like it's the entire demographic spectrum of like, you know what? Getting the maximum value isn't the top priority for me. Like, you know, in my case, my wife found a new place and she wanted to be in the new place. And the desire to not lose the new place was actually more than extracting the permanent value out of the last place. Right. So sometimes the motivation isn't on, you know, just getting me top dollar on the old house. It's securing the new move, making sure I don't lose the house of my dreams. Like that becomes more valuable. So then all of a sudden the iBuyer thing starts to go very, very mainstream. Like, I just don't want to have open houses. It's a pain in the butt.
Yeah, once people start talking about like, you know, over the water coolers or barbecues, and they're like, yeah, dude, I didn't even have to show anyone in my house, didn't have to do this, didn't have to sign up. I just did
nothing.
Just done.
They wired the funds to my account on Monday and like they told me like, you know, take 30 days, have your time. Like that becomes really appealing to people.
Yeah. So how can like a mortgage broker take advantage of that or get in on that or, you know, be able to get business out of that?
Well, this goes into the bigger picture of like how easy is the process, right?
Yeah, let's talk about that. What's the future of the mortgage process?
Yeah, so like I think it's irrational that you have this, you know, I don't know if I'm going to get a loan for 17 days, and we have this
contingency,
contingency like that. We're just so used to it because we're in the game.
Yeah, it's pretty normal to have a 2-week or whatever contingency.
Yeah, like it's normal, right? But as an outsider, you come into the space, you say, well, that's madness. You mean I'm actually put an offer on a house and not know?
Yeah.
So and these are things that can very easily be solved for with technology.
Right.
So get to definitive yes or no before the offer is made really, really easily.
Right.
You know, we have to give the people a quick and a nod for this one because they created that rocket thing to make your life easier. And, you know, people could argue about whether it's easier or not. But the truth is the consumer thinks it's way easier.
They think it's easier,
right?
yeah. And it should be easier, right?
But there are new things behind that are coming that are substantially easier, right? So can you get the approval process way, way down because the application was really easy and we get to certainty and, you know, all of that stuff I think is not futuristic. We're not talking about like 5 years out. We're talking about, you know, 12 to 24 months out where this is pretty normal.
Interesting.
Right. So
unpack that. Like, how will it work? Will a buyer go, would it be a seller that starts this process or a buyer or both?
Yeah, so buyer typically, sellers are buyers in most cases, right? Yeah. So I'm thinking about selling my house.
So will they get an appraisal on their house that they will offer to the buyer?
Why not?
Right. And have a preset appraisal.
Yeah. I mean, in a perfect world, we would pre-inspect, we would do all the disclosures, we'd fill all the reports. And you know, when you buy a company, you get like an M&A package on the company and like all the due diligence is in a folder.
It's already been done.
Right?
Right, yeah.
Why don't we have that with houses? Like, that's crazy. Like, Is
someone working on this right now that you know?
Totally. Oh, yeah.
And we're talking like it's going to be we say the future, but it's like almost the now.
The future is the now. Yeah.
Like, so this will start happening and we'll be like, okay, I didn't see this coming unless you're watching the $1 Million Mortgage Experience, right?
Totally.
So let's talk about how this is going to, so this will happen, you're saying?
Yeah, so let's take a real-time example, right? So in Atlanta, if you're a seller and you're thinking about selling your house, you know, the internet remarketing is really good. So, you know, I poke around, look at some listings, and the moment I start looking at some listings, all the marketers know I'm in the game, and so all the retargeting ads start coming in, right? So I get an offer from Zillow, I get an offer from Knock, you know, I get an offer from Open Door, but, you know, I'm wondering now, hey, is this all I get or what are my other options, right?
Sure, because they're not coming to see your house yet, right?
They will. Many of them will, right?
They will, okay.
They'll give you like, hey, we think we're in the range of X, but we need to come verify it.
Okay. So they start out with the range. They'll say, we're going to buy your house for between $425 and $475, something like that.
So let's just pretend for a second we're buying airline tickets, right?
Okay.
Do I go AmericanAirlines.com, AA.com, and like just look up for one flight?
No.
So I'm taking the family to Europe this summer. I've got a wedding in Italy.
Right.
Like, I'm not going to go to each individual website and solicit, you know, what can British Airways do for me? What can American do for me? What can United do for me? I go to kayak.com.
Trivago or whatever.
Yeah, and they aggregate all the tools.
Right.
So, I mean, we have this today. So Homelight has a product called Simple Sale, and you can key in your address, and it'll actually kayak.com all of the options and bring them back. But the difference is that it actually brings it back and puts it in the hand of a real estate agent, right?
Okay.
So the goal is not to cut the agent out. The goal is to actually put the agent in the living room. Like, so you have like, here's all of your options, Mr. and Mrs. Seller, and here's the agent to give you the
buyers
guidance,
already,
right?
But they're corporations,
right?
And then, do you want to take a corporation's bid or do you want to take a buyer? Yeah. Okay.
So you can get 92% today, like in 10 days, but it's 92%, or you can sell to like a group of flippers or investors in the neighborhood and maybe it takes 15 days, but they get a little bit more. Or I can take it to full market for you and I can get you 100% of value and it'll take us 46 days and here's my marketing plan. Like, which would you like?
Interesting.
And we make the assumption that everybody wants to have the full service or that cost conscious people want to have the discount. But the truth is there's a lot of overlap from all demographics. There are boomers that don't want to deal with selling the house.
Yeah.
And will take the 92% quick value.
I would think that a lot of people would want the most. Don't you think? From my experience in selling homes, I always want to get the best price, the biggest price. Like I want to get the most, right? And I'm not necessarily in a super hurry to sell. I think the buyer wants to be in that house, right? They want to, especially someone who's renting or they're looking, they need to find something within 30, 60 days. But someone who's selling, and they my experience is I've always wanted the highest price. So I've never been in a situation where I wanted to take a discount on a price. Tell me more on why you think that's something that's going to be attractive.
So this is one of those things where we have to like throw out our instincts and use the data, right?
Right.
So in your example, your sample size is 1, right?
One,
it's like, what's John like?
I don't want to sell a cheap house.
Or probably sample size of 2, like your wife, like in your ear going, I know, John, but right?
Yeah. Or
Yeah.
But I've only sold maybe 4 or 5 of my own homes, and then some other flips. But when you're selling a flip, you definitely want a high price because that's your profit margin, right? But then you want a certain price. You want to make sure it happens, and it usually comes in when there's any kind of need on your end. Like if you have a need, like if I need to sell my house because I have another house I'm trying to buy, have to close in a certain amount of time. That's where that probably would factor in,
right? Or people downsizing, or health issues, and you want to be closer to your kids,
right?
Or someone's passed away and the kids are in a remote place and don't want to deal with it. Like it ends up being like somewhere between 20 and 35% of the transactions are for these other reasons. That's a lot of transactions.
Yeah, it is.
Right?
For sure. Absolutely.
Convenience is actually a much, much higher factor than we think it is.
Yeah.
Like I don't want to repeat this process. Like, we almost got divorced last time we were through this because there was so much internal chaos. Like it's a messy process. Like once you've gone through it.
Especially if you think you have a buyer and then, 17 days later, they back out.
Yes, you lose the house of your dreams. Like that's terrible.
Yeah.
Right?
It's awful.
So
keep going because this is interesting.
The maximization of the old value isn't what it turns out is the primary driver of this. Okay. Like for some people it is,
right?
But for a huge chunk of our society,
and in this scenario, you get those 3 options. You get certain sale, you get maybe home flippers buying it a little higher, or a full marketing plan at 45 days.
Yeah.
Okay, so then let's say someone decides to use the technology brand, like that play. So walk us through that.
So we just pre-built in commissions, so the agent actually can earn commissions on the small number of people who might accept like an Open Door or a Zillow or Redfin Now, or
there's some commissions built in.
And by the way, those are the big ones we hear about. Like our database has got over 12,000 like private investors who said, you know what, in this particular zip code, I'm willing to outbid Zillow every day of the week. Right? Interesting.
Yeah.
I know they'll pay 92, 93, 94%. I'll go to 95.
So can you take a Zillow offer and use that as like a bargaining chip kind of thing?
I think this whole space around like just show me all of my options and then counsel me on what is good and bad about them is really where the value is going to lie, right? I'm not trying to cut the agent out of the equation. I actually think they absolutely 100% need to be there, right? Because
you need someone to strangle if they're not doing the job, right? I'm going to call the agent tomorrow and find out what's going on.
Yeah.
You got to have someone to blame, on it.
So we're going to see like this like full transparency in all of your choices, like putting you in the hands of a really good pro. And that really good pro will give you guidance.
Right.
And so then that's where the mortgage thing plays in, because now you're like not waiting to hear from the real estate agent, like, hey, we've sold the new house and we found the new one and it's, now it's way back. Let's apply for a loan now. Like you can take that all the way upstream of like, we know the house is actually going to be listed. And while we're actually staging it, we should be starting the process of all the underwriting way, way up there. Like, we know we're moving. Why aren't we starting then?
So, and you were mentioning this earlier, that a buyer should be completely approved and all that they're needing now is an appraisal, which then the seller should have.
Right.
Right. And already used like an AMC third party. If it's a loan over, $1.5 million, you might need 2 appraisals. So maybe they've got 2 appraisals. That way, this process can go quick. Like, what in your mind, what do you think in, say, a year from now, 2 years from now, how fast these mortgages will go?
So it's really a question of like the ability to resell the mortgages to somebody else as to like what they'll accept. But like,
right.
I see no reason why that, 30 and 45 day escrow isn't pushed down to like 5 and 10 days.
Right.
Like 10 seems like a pretty easily doable. Under 10 is going to get hard, but I know it's possible. Mm-hmm. Like if we do all of the underwriting on the buyer, like you're either creditworthy or not. Right.
Yeah.
And the house.
But there's always nuances. Like, there's that's kind of why we exist, because we do make sense lending, right?
Yeah.
We can do exceptions. And so all that takes human involvement and touches. We call it touches because it's like a lot of touches. These loans are not perfect. I mean, the borrowers are human. There's always something that's a little bit different, a reason why they didn't fit perfectly into a box. I know that what you're saying is the speed time will shorten. In my mind, that means you really just have done a lot of that due diligence pre-offer.
Yeah.
And that's when you should be doing that stuff, right? Instead of saying,
yeah.
But see, sometimes I think the caution is, as a mortgage person, we don't get paid until it closes. Uh-huh. And do we want to do all this work if there's not a contract in place to make sure that I'm not wasting my time with a buyer? So, like for instance, one of our loan officers in the past had like, 30, 40 pre-quals out, right? And none of them turned into anything. That's a lot of spinning wheels, right? So where is there going to be a place where you have a good buyer and they're going to eventually buy a house, and so you're going to be willing to put the time and effort into pre-approving them? Or is that just going to be a big company like a Zillow or Amazon that comes in and says, we already know all your stuff, or a bank and does all that?
I think we're already there, right?
Right?
Yeah. Like the information on you and I is already in all these databases.
Like I bank with Wells, one of my banks, and I get, I'll get a message that says you're approved to buy a car for this much money already. It shouldn't be that much different, right? Like we should be able to pre-qualify someone, but then you got to work through all the little intricacies and details. But I could see that happening. Yeah, I could see it,
So not happening.
So loan officers, go find your buyers. I mean, a lot of you guys probably already do this, but I would say go and do a lot of that upfront work, especially if you can tell them, like, look, this is going to make a closing happen way faster. You're going to be more competitive, because when you're going up against cash buyers, you lose, right? I mean, you'll lose unless you have someone that can close quick.
Right.
Like, I think that's a huge advantage, I think, for a mortgage broker, is to say, you know what, I'm going to take a different approach. I'm going to get you 100% approved. And then it'd be like a TBD. We call them TBDs, TBD. Right?
Yep.
And I know that happens and we do that, but what other technology can help them do TBDs? Is there anything else? I mean, that's happening right now that we have?
Yeah, this is all in process as we speak. Like, there are very smart people actually trying to solve this problem right now.
Yeah.
Right. And then very, very near future, like, why would you take an old school loan with a 17-day contingency when you can get essentially the same exact rate or even better, perhaps, and have the full TBD and actually buy like cash?
Wow.
Right. If buy like cash is available.
So that's a disruption, right?
Absolutely.
There.
Right.
And who do you see mortgage companies like that are doing this right now? Quicken. Who else? Like, is there any other?
Yeah, I think we could just rattle a name of like anybody that's forward facing and has lots of developers and smart people internally is thinking like, this is the new battleground. Like, Homelight is 100% going to play in this arena.
Right.
Like, I'm really fascinated by this personally, because I would like all the contingencies to go away. Like all of them.
It's like, do you want to buy this house or not?
Yes or no?
Yeah.
You want in? Great. Are you pre-approved? Great. Here you go. Here's the keys.
I think some of the things that I've seen, as an originator is especially in the upper end, right? Like loans that are, someone's buying a $2.5 million house in LA, right? What I've seen is that the house, after the inspection comes back, there's something wrong, and so then it falls out.
Yep.
There's cracks in the foundation. There's a bunch of work to be done. The seller doesn't want to do the work. They're, so they don't agree, and they fall out. That's really where I see kind of some of the fallout.
We're always going to have inspect it physically, right? Because you're giving me the hey, this thing is really good, but then I'll go actually and take your word for it and actually hire a professional inspector.
Right.
Like, I mean, frankly, you should do the professional inspection before you list the house, right?
Yeah.
And you should provide the professional inspection.
I think they do, but then I think, do they? Rarely?
Yeah.
So that needs to happen.
Like all the disclosures, a professional inspection, appraise it up front, put it all into, you know, some type of a Google Drive folder where it's shared, and like we only give you the password if you show, you know, serious interest. Or
so is
that'll be like happening? A new open house. Like to get into the diligence room, you gotta, you know, give us your email address. But
right. So that's happening with some of these tech companies. Like does Compass do that?
To my knowledge, they haven't played in this area.
Space.
Right?
Okay.
Yeah.
But Homelight requires that to be done.
No, so we're not actually selling the house.
Okay.
We're referring the listing to.
But do you ask the agent to do? I mean, is that
not today.
Coaching? Okay,
yeah.
But it's coming.
Yeah, can we give them the systems and tools to make this, like, basically, how do you remove the friction?
Yeah,
that's
what I keep hearing.
All the friction is like, just make the friction go away, and this is the promise of technology. We can remove the friction.
It's coming.
Like, it's coming. It's very, very soon.
Yeah,
like really soon.
That's good.
Not, and you know, most of the people watching the podcast is coming a lot faster than you think it is, right?
Yeah, be ready. You guys
be ready.
We got to be ready for it. And that makes me think, it's like, as far as, you know, CEO of Fund Loans as a wholesale lender, I mean, we've got to be able to do TBDs. We've got to be able to do, you know, be better at getting these approvals, you know, clean and cleared before someone goes in, right? Because that's the thing is, it still takes a good amount of time. I mean, we're closing deals in 15 days and stuff like that. But I mean, I
wish all your peers were doing that, John. Like,
I know.
Like, please, would you be like, no.
And some of our loans take longer, but I mean, because there's issues and you know, the borrower won't provide things, and then you have to go back but at the end of the day, a lot of this stuff should be done up front. It should be ready to go. There should be, you know, this is where we all want to be, because the faster we close, the sooner we get our commissions, right? So it's like, let's talk about culture, because I know you've ran teams, and I know you've ran, you know, been, you know, in the forefront of companies and seen what destroys a company or what makes a company great. You know, a lot of our viewers are brokers. They're mortgage brokers. They may only have, like, you know, smaller teams, 6 people, 4 people, 8 people, 10 people, but some of them are bigger companies. What would you suggest to, or what have you seen that's made a company great as far as culture goes? Because a lot of the tech people get it. You know, a lot of the tech companies get the culture thing, where, you know, bankers and mortgage companies and real estate companies have been around a long time. We don't, there's just a, you know, it's just not, because a lot of the startups had to do something different, right, to make the culture great because of the competition of all the different companies out there. What have you know, I wanted to talk to you about this because I know you've seen good and the bad. Right.
Yeah, I've seen a couple different cultures, and I think the key denominator between them that's common is the transparency, right? Okay. So if you think about, like, getting in a car with someone, like, I don't particularly care to sit in the back seat where I'm not in control of the car, right? I'd rather actually have my hands on the wheel, me in control of the car, and I think you can make that analogy around, like, a workplace. Okay. Which was, are the leaders really transparent and actually letting all of here's what we're really facing, right? So what normally happens is, like, leaders just tell you what they want to tell you, and they only tell you the good stories and not the bad stories. And then, like, the real confidential discussions are not shared with the employees. They can't handle the truth, right? Right. Like, and there's a movie for that, right? You know, you can't handle the truth, right? Right. The reality is that when you're actually overly transparent and you share more than you probably should, the employees actually trust you.
Got it. Yeah.
Like, here's where we really are. Some of it's good. Some of it's scary. You know, we don't know if some of this is going to work out, but here's why we're doing it. And by the way, you actually can be participative in the process. Right. Like, that overly transparency where you actually think you're sharing way too much. Inside of the good cultures that I've seen, like, things shared by the CEO all the way down that should not be shared in a public setting inside a company, and basically saying, I'm going to tell you more than you should know, and I'm going to trust that you're actually going to be not share this outside of the company. Right. I've now empowered you with the same stuff that I have. We're
Maybe
all
you
in
can
this
be
together,
a part of the solution.
right? Yeah. And so in that, the employees feel like, okay, I'm not sitting in the back seat blindfolded with no idea where the car's going. Like, I actually have some say in this. Right. And
it helps you to understand why the car took a huge detour, because you now know the reasons, besides just going like, what the hell just happened?
Why the hell are we driving in this field over here? I thought we were going over there, right? Yeah. Yeah, because we changed directions.
And then you don't trust, right? That is the lack of trust, like you were talking about.
So it builds trust and it builds respect. And therefore you get, like, really dedicated employees who are willing to, you know, chip in, put the extra effort, actually look after the customers and, like, buy into the vision. Right. Like, be part of it instead of just...
What if you have an employee that's, like, really talented and great, but they're just toxic and, you know, just just every day it's like cringe, right?
This is a hard one, right? Because normally, like, that story normally starts with, "He's my best salesperson who puts up the biggest numbers," right?
Right.
And if I make that difficult decision, then like I lose all of this revenue because my superstar brings home the bacon is not going to be part of the company anymore.
Right.
It's my personal opinion that the faster you cut that person out, the better off you'll be.
Wow.
Because while you might take that short-term hit to that whatever that person's contributing, what you don't realize is all of the other negativity and other people in the corporation that are being held back, or that are gossiping in the hallways, or like going,
all the time that's wasted.
Just the cycles are not worth it.
Yeah.
And so if you're hesitating, the answer is, are you being true to your culture? Like by keeping that person, are you actually being ethical and fulfilling your company's mission to like your end customers?
Right.
Probably not.
I used to think like, don't burn the lifeboats, right? Like you want to get this, you don't want to cut this person unless you already have something like ready to go, right? And then, because if you don't, there'd be all this disruption, it's gonna be chaos. But what I found too is that, if you cut that person or you get rid of that, even if there's not a lifeboat, like it's just better, right? Because you're going to burn if, and crash if you don't. But I think that's good. What are tech companies doing right now to build culture? I mean, I know it's not just like I think Gary Vee says, like, it's not just a snack shop, having good snacks in your office. Like there's other things like talking.
Granola bars doesn't fix it. Yeah.
Right. What have you seen? And I know you're in Silicon Valley, right? Like a lot of your time spent up there. What are you seeing in companies today that is helping build the culture that we're talking about?
Actually, very much transparency around goals, right?
Talking about goals,
setting individual goals for individual employees from the top all the way down, right? So even though I run a division for the company right now, like I have weekly accountable goals, and I actually have to enter in my goals once a week. And sometimes I think, this is a pain in the butt, and I don't want to be doing this.
So they're asking you to create goals.
Sure.
Okay.
Well, like,
and so
CEO has goals. I have goals.
Yeah.
All my direct reports have goals, but we have like a regular checkup of like how are we doing against those goals. So from the lowest employee to the top of the food chain, like everybody's got goals all the way through the whole thing. And we're on them, and we're revisiting them, and frankly, we're readjusting them quite frequently.
Nice.
Right?
That's really good. I'm going to do that. That's
but
really
the greatest part about this is like it starts off amazing, like you get all this alignment, and then like we get busy. And then a month and a half in, you're like, I got a meeting and I can't do my goals, and like,
Yeah.
And so
when I have big goals, I got the BHAG and goals, daily goals, things I write up on my board and things like that. But I do like that, empowering others and getting them to give you their goals, make them accountable too. I mean, and tell them your goals, and then have them tell you their goals. Because I think they say I think it's the Bible that says, without a purpose, the people perish, right? Like, if they don't feel like they've got something they're working towards, they're not going to be thriving. So if someone has something and you pull that out of them and tell them, tell me your goals. Like, I want to know, and I'm interested, and I care about you and what you're doing with, your day to day. And just to our listeners, tell us what your goals are. I'd love to hear it. And because that's really cool. That's a way to grow and to improve the culture.
So I learned this in a really funny way, actually, because I never served in one of our armed forces in the military myself personally, but I've worked with a lot of people who did.
Right.
And I worked with a gentleman who is a Marine, because you're never not a Marine, you're still a Marine, right?
Right.
And he was responsible for the recruiting of new Marine candidates to come to the Marine Corps.
Okay.
And they had you need to know what your mission was.
Right.
Only they would shake him at 3 a.m. and wake him up in the middle of the night and go, what's your mission? Right.
Yeah.
And, I would walk into a real estate branch and go, I couldn't shake them, and I couldn't ask them what their mission was, but like, do they really have clear focus and goals on what they need to accomplish?
Yeah.
Not like the BHAG, but like Monday. Right.
What
By this Friday,
what are you doing today?
What are you doing this week that's actually like, and is it aligned with the corporation?
Right.
That's why you see like this massive rapid progress in Silicon Valley, is because you have an entire organization aligned with short-term goals, and all the short-term goals are all linked up with the big goals.
That's good.
And you get a lot of lift.
That's awesome. So being head of, like, I know you worked at Sotheby's, you were head of the marketing, right? Or you were part of the marketing department? Or
I was the chief operating officer for Pacific Sotheby's, which is now the largest Sotheby's in the chain.
Nice.
Yeah. So
and that was all luxury homes, and our viewers and listeners are very interested in jumbo, right? Jumbo mortgages, self-employed, non-QM, all that kind of thing. So do you have any kind of wisdom or tips, techniques, tricks that you've seen, mortgage people, get referrals from agents like at Pacific Sotheby's? Like, was there anything that you saw that stood out? I know the typical loan officer is going to go after, getting an agent like that. Like, the dream is to have, a Clinton Selfridge, on your, that's going to refer you business that's doing 7, 8, 10, $12 million homes. So, like, what have you ever seen any interesting ways of loan officers securing, I know it's a weird word to use, but to get an agent to work with them? I know a lot of it's relationship, but was there ever anything that stood out to you that you saw was like, wow, that mortgage person stood out and did something different? Yeah,
a couple of things. One is a really obvious one, but I'm sure we've talked about it, which is like, when I ask what the rates are, just tell me what the rates are.
Yeah.
Right. Like, it's not a mystery or a secret, or like, just what are they factually?
Yeah.
And so when you have like high net worth individuals who run companies, like, they call the accounting department and say, what's the numbers? They get the numbers back right away factually.
Interesting.
Right.
Yeah.
I ask for like, what's this? I get the number back right away. I ask a mortgage professional, what's the rates? I get, like, it's going to be
depends
like,
on your credit score. Right? I've done the same thing. Yeah. Right.
So that's hard, but it's like, well, in this case it's here, and in this case it's here, and you're probably somewhere in the middle, and
just
I can help you narrow it down.
Right. Yeah.
Like, it's factual.
Yeah.
The moment you're not factual about that, like, I go, okay, wait a minute. There's some kind of cockamamie like shell game going on here. Right?
Yeah. Yeah. Then it creates distrust, right? I mean,
right.
So if you say, it's today the lowest rate you could get is 4.25, whatever.
Yeah. That's factual.
That's factual. And then, we have options that go all the way up to 6.5 or whatever it is.
Yep.
And, hopefully we'll get you on the 4.25. And, I think you will. I'm confident that you will after seeing your credit and blah, blah, blah. Yeah.
Yeah. Then it's a very different discussion. It's like, okay, this person has real command of their space. They really know what they're doing.
Yeah.
And they actually have real knowledge. They're not just going to look at some calculator on the internet and pull me some rate change, right? Like, they actually have real customers with real knowledge, and, there's real value there.
That's interesting. So what about referrals? Like and that's once you've talked to like a buyer or whatever. What about like getting a real estate agent to
breaking in?
Yeah, breaking in.
Yeah.
The icebreaker. Or just, I'm sure in your office you'd probably had, I don't know, maybe you did.
Everybody, right? Yeah.
Coming in, walking in, here's my card.
But here's
that's
a card.
not you got to be doing something, but maybe just giving your card isn't the best because people just toss it in the trash. But like, what would be an interesting way to get that icebreaker? The
one that caught my attention was, hey Chris, I know that everybody calls upon you, and you probably have everybody in the mortgage business coming here and pitching for you. Which the answer is yes, they were right. I'm willing to take your absolute worst clients that you possibly could ever get. And make sure that I make magic happen for them. And I'm willing to do this repeatedly for you to prove for you that I'm actually really good at my job. So cool. I would like an at-bat at your absolute worst scenario, the people you do not believe who actually can get a loan. I will take care of them. I will make sure they have an amazing experience, and I'll get you deals you can't get.
That's good.
And then I'm like, okay, that's kind of a cool pitch, but thanks, I'm still good, right?
Yeah.
I'm not hungry right now.
I got 3 other people that'll do the same thing. Yeah.
But then here's the next thing is consistency. So step 1 is the approach, which was give me an at-bat. Step 2 is like, okay, was this a fly-by-night thing? Because the last 10 people that came through here dropped off some silly little Chotsky that I didn't care about, and bad pens or squeezy balls or whatever, and like, or like a fidget spinner.
You just said squeezy balls. Anyway, we might delete that out. That's
the magic of the internet, right?
That's good. So consistency, right? Like coming back. I love that because you're right. People drop off a freaking flyer and you never see them again.
Here's the rate sheet of a bunch of bullet points. By the way, that thing they dropped off at like way too many bullet points. I can't read it. Like, I have ADD. I don't want to read any of this, right?
That's actually a good point because I think it's really crazy how many emails I get, and you probably get. Everyone here watching gets every single day. Do we think for a second, if we won't read those emails, that someone else is going to read our long freaking email?
Right.
Why? Like, why don't we flip it around and just say hi, or just say like, do you need a mortgage? Like just something small instead of some crazy long thing that someone's going to instantly delete, like try a different approach, right? Like I've always liked to try out different things and be, back, this is a weird story, but back when I was first in the mortgage business, I would telemarket. And at one point I just got so sick of it. I started doing different accents, from like England and, different places, nothing that was like too like telemarkety, right?
I think there's a podcast episode here. Like you could
like, if you could get good at it, but I mean, just trying different things, right? Like not just doing the same thing over and over, expecting different results. And so what you're saying is go in, drop off that flyer, tell them that you're going to be that person that,
I'm consistent. I have systems. I'm a professional.
But then
I follow through
back,
and then
right?
do it again.
Come
and
back.
do it again. And
Come
do
back.
it again.
Yeah.
Right. And be respectful. Like, I understand you have a good relationship, but if there's ever an opportunity where you have a scenario that pops up where that person can't solve it, like, I hope you think of me first.
Right. And I think
that's a fair at bat.
Yeah.
Right.
And doing that, you'll get business no matter what.
I don't want to displace your deep relationship.
Right.
But I would like to let you know you have another opportunity.
Because at first, I think by saying those words that you just said, I'm not going to displace this relationship, you're de-arming them, because the first thing they're going to do is put a shield up saying, I already got my guy or girl. I'm not going to.
We've been together for 20 years.
Yeah.
Like,
I need anyone else.
Our kids are best friends. Like, yeah.
But if you come in by saying that you don't want to replace that person, you're disarming them and taking that shield down from them, instantly trying to putting up the shield.
Yeah.
So I think that's brilliant.
And you're the solution provider. Right? Because who doesn't want to work with a person who's the magical person who can solve problems?
Yeah.
Right?
Because everyone needs that person once in a while. Yeah.
You need that person. And then that person becomes your go-to because...
Yeah. And if they keep coming up, keep showing up, you're going to start trusting that they would actually be consistent with what they're saying they're going to do.
So this is like right up Fund Loans' like entire mission statement, which is like, when you have this weird scenario and you're not sure it's going to work, like pick up the phone, call your rep at Fund Loans, and they'll magically make heaven and earth, open for you. And like, here you go, problem solved. Right.
Yeah.
You guys have built your business on that, which is an amazing part of what you do.
Yep.
That's great, but that's a great story for the LO trying to break in, which is, take on the problems.
Right.
The problem is everybody wants the, $1.5 million,
low-hanging fruit.
like high down payment, massive equity.
The guy that's going to get that email from Wells Fargo that says you're already approved. Right?
Yeah.
You want that person.
Everybody wants that one.
But that person's already getting their loan at Wells Fargo and they don't need you. So be the person that can go and get the tougher loan and get good at doing those tougher loans, I think is the message, right?
And you're adding real value, right?
Yeah.
You're solving real problems with real people,
right?
And saving the day. And
There's always going to be a need for that person. When technology comes in and disrupts all the regular loan officers out there, there's still going to be a need for the one that can get magic,
right?
Make the magic happen.
Like, get under the covers, pay attention, look at the details, be better than your peers. But you don't get an opportunity to do that if you don't take on the challenging ones.
That's good.
Yeah.
Anything else you want to leave us with?
Yeah, this is a fascinating time in real estate, right? It
is.
So I think
it's exciting, right? What do you think the future of real estate is going to be? Do you think so? I like to ask predictions. So my thoughts are, it's really reminiscent of 2001 because of a lot of the new products coming out in mortgages, hedge funds jumping back in, money coming back into mortgage expansion of products. That happened in 2000, 2001, 2002. Real estate, mortgages are still hard to get. So there was never any crazy lending, right? So when I say never, in the last 6 years, there wasn't crazy lending happening. It's still not happening. Appraisals are third party. They're really, very, very quality controlled. Appraisals are. A lot of appraisals come in way low and you got to get 2 and you got to get a CDA, which is like a appraisal review. And so there's not a lot of, area for the mortgage business to cause a crash or cause a crisis. But there are a lot of homes for sale that are above, say, 5 million or 10 million. There's in LA and different places. But where do you see real estate trends, going as far as prices? Do you have an opinion on it?
Oh, you mean like forecast the
Do you have an economic opinion?
I don't have an economics degree. I do have
But your finger's on the pulse of this.
I do have a finger on the pulse, and I also have this really interesting thing that I've been through a couple of cycles, right?
Yes.
And when you look at the people that are practicing real estate, how many of them have been through the cycle, right?
Right.
So 07, 08 was pretty messy, as you recall, right? But remember, there was one before that.
It was a breeze.
Yeah, it's all good. But what I do remember was when I got it in the space originally, it was in a bad cycle, right? Coming out of the cycle, I just didn't know any better. I just outworked people to hustle, right? But all of the veterans all told me the moment somebody tells you there's never going to be a cycle again is when there's going to be a cycle, right?
Yeah,
so
that's true.
The data is actually really good in front of us right now. The fundamentals are amazing, but we're 9 years into a bull market, and this isn't going to last forever.
Right.
So is your business resilient enough that a decline in prices or and/or units wouldn't hurt you.
Right.
And if you're running on a really thin margin and that would hurt you, like you're in a bad spot.
Right.
So you should be adjusting your business today, like adjusting your costs and your expenses so that you can survive a downturn because we know we're going to have it. I just
don't know when.
Don't know when. Yeah.
What do you think? Do you think election year is gonna be a good year for real estate?
No, housing market amazing. Loans are like, okay, so we're, in this podcast.
There's more expansion coming.
We complain about like that the rates are high. The rates are not high.
They're
right?
not high.
Yeah.
And there's expansion. Like we just got a HELOC. We just got a for self-employed.
Okay.
So 12 months bank statements.
Yep.
All the way up to 90 LTV, up to $500,000. So
way cool.
Yeah, so that's an expansion that never existed. That product, at least in the last 10 years. We're also getting other expansions and products, and for self-employed borrowers and people with multiple jobs, people with new jobs. So there's expansion that's still coming for the mortgage products, but there also are. I mean, what would you say as far as the supply and demand? Like, do you get to tap into that and find and see kind of what the supply and demand is in the markets?
We're seeing the regional differences, and some areas are way past the peak and are cooling. I think the one takeaway though would be
because there hasn't been overbuilding, right? I mean, there hasn't been
underbuilding. Yeah, not enough housing.
So with supply and demand, off, it's still a seller's market. Would you say?
In most areas, yes.
Right.
Yeah, most areas.
So what do you think it would take for there to be there's softening. We all know that. Like we've seen softening in not every market, but in some markets.
We were also massively overpriced in many markets. Like the run-up was not sustainable. Right. San Francisco, Seattle, Los Angeles, these are,
Yeah, but still, I mean, you can't get a house in San Francisco, right? You can't.
Correct. Right.
So, and then with the fires in Northern California and Malibu and Santa Barbara and like Santa Rosa, like all these places had fires and thousands of homes burned down.
There was an article that came through my phone the other day that actually scared the heck out of me, which was like, City of Los Angeles proposes turning all residential R1 into like 1 to 4 units. And I was like, oh my God, like, can you imagine? But like, this is a solution for our housing crisis. We'll just change the zoning. Like,
my gosh.
Total free for all for like all of Los Angeles County.
I heard that was happening, was proposed on a bill in California, right? Yeah, even San Diego and different places.
So, can you imagine?
But with all of that in my head, it just tells me like, we'll have softening. We're going to have some areas where there's going to be houses that sit a little bit longer, but really
I think it's irrelevant.
Crash, right? Like, I
think it's irrelevant, John, because units are go up and down.
But in a sense, people are still scared.
We sold a lot of houses.
We did
in 07 and 08.
Yeah.
Right. There were still a lot of transactions, and a lot of agents did really well.
Yep.
It just was a handful of people doing really good, not the mainstream.
Right.
We sort of flushed out all the onesie twosies and went to the teams and the systems.
Right.
And we've never really looked back from there. Right. So even with a decline, even with a housing market deflation, there will still be an opportunity for all the people watching here to do a lot of loans, to make a lot of customers happy. People still have housing needs. That's not going away.
Right.
So
it's a great
There's
place.
A lot of pie for everybody.
Yep. Just get more products. Get our products, the Fund Loans products, and you got to tell people, right? You got to tell people what you're doing and what you've got. Like that's, I think, what I think has made me successful is not being afraid to share what products you've got and telling people, like, put it out there on the social media, put it out there on the, and tell your friends, your family, tell your mom. Your mom will tell everybody about it, right?
Yeah, totally.
My son can do this or my daughter can do that. It's like, and if you're not doing that, then no one's going to know about it, and no one's going to know. You got to get their attention, right? You got to get the word out. So, anything else you want to leave us with?
Yeah, I would say everybody, especially the people in the mortgage industry, like if we've been doing this way for a long time because this is the way we do it, those are the ones that are going to go. Right.
And they're going to be surprised. They're going to be like,
wow, where did this come from?
Right.
What do you mean I can like get a full TBD underwriting approval in like 4 hours?
That's not a real offer.
That's not real, but that's coming. Right.
Yep.
So
be ready for that.
Be ready for that and be able to use it and participate in it.
That's cool.
Yeah. It's a lot of fun.
Can someone contact you, Chris, and find out more?
Sure. Chris@homelight.com. Actually, Chris.Crocker@homelight.com.
And we'll put a link to it.
Yeah.
Awesome. Thanks for coming on.
Yeah. Thanks for having me, John.
Awesome.
It's always a pleasure.
Cool. See you next time. Thank you for listening to our podcast. If you guys are looking for more content like this, we have a Fund Loans YouTube channel where we give away more tips, secrets, and origination ideas. You can also email us at info@fundloans.com. And if you've made it this far, I think it's safe to say you like our content. So please subscribe, share, and send us your scenarios. Let's fund loans together.